what's up, everybody? I just need to do a quick audio check real fast. All right, we are good to go. Welcome back, ladies and gentlemen. My name is Deontay Long. I am also known as the Trucking Trader. And we are going to be looking at MNQH 2026, pretty much the NASDAQ. So we are pretty much going to be looking at the NASDAQ chart and seeing what's going on, right? The market should be open. We typically open up at 6 p.m. on Sunday, right? So I'm going to go to the main chart that I use. It is going to be a little bit crowded. All right, I'm going to remove some of these lows. Actually, no, I'm going to leave those lows on the chart for now. So on the chart that I use, first thing I'm going to do is go to the 1 minute time frame. I just want to see if we had a new week opening gap. This is what I do pretty much every Sunday when the market open. And because the new week opening gap is so significant, even if it's a small new week opening gap like how it is right here, right? So this gap right here, if you guys look at the bottom of the screen right here, right here where my mouse is at, right above that, you will see that it says Friday 1659, and then as soon as you scoot over to the next candle, it says Sunday 1800, right? So this is where the gap typically forms from Friday close to Sunday's open. And then we're going to box this up, right? So we're going to box this up going from Friday's close, which since this is a red candle, the close of the candle is going to be at the bottom of the body of the candle, right? And for those of you who do not know how to read candles, pretty much the bottom of this body is the close, the top of the body is the open, and the top of the wick is the highest point in which the price got on this candle. The bottom of the wick is the lowest point in which the price got on this candle, right? We are on the 1 minute time frame. So we're going to start from the bottom of this body. And then because price opened, right, this is a green candle, which means what? Price opened at the bottom of this green candle, right? So we're going to put it right there. And, you know, it doesn't have to be perfect right off the rip. Just for the sake of this video, I'm not really going to worry about trying to make it too perfect, but normally I do go inside and I do add the coordinates, right? So like if you hover over the top, we will have to move this out the way so you guys can see. But if you hover over the top of this candle, you guys will see up here, right? Up here is going to say open, high, low, close, right? OHLC. And that's going to give you all of the coordinates of the candle, right? So if you hover over this candle, you see where it says close 24772.75, right? So if I wanted to be very precise, all I have to do is go to coordinates 24772.75. It's already on there. And then right here for the green candle, you guys can see the opening price is 24789.75. 0.25. So if we click on this box, double tap it, right, 0.25. So all we have to do is change this around. And then I like to label my new week opening gap like this, right? Pretty much by the initials. And then I put the date in there, 02. I think today is what, the 15th. And then, you know, we put the year in there just because, right? Whatever. And, you know, you can do it however you want to do it, but that's how I pretty much do it. And then I'm going to lock that onto my chart, right? Because that is going to be significant throughout not only the coming week, but, you know, for weeks to come, right? So we are on the weekly time frame. Now, just want to do a quick breakdown for you guys. I'm not really going to be on the screen for too much longer. I'm still on the road, trying to give you guys a screen, you know, the best way that I can. It's really not as fun as using my PC, right, that I paid almost $3,000 for. But, you know, I don't mind doing it like this either, right? Especially when you guys, you know, like the video and y'all come on the screen and engage and talk to me and stuff like that. Makes it really fun, all right? So that's pretty much the first step that I do every Sunday. I put that new week opening gap on there. And then, you know, if we want to do an analysis real fast, first thing I'm going to be looking at is, first thing I always look at is the wicks, right? So every purple box that you guys see on my chart right now is a new week opening gap. Right? Every purple box that you guys see on my chart is a new week opening gap. So pretty much the way that I like to trade is, you know, when I first started learning ICT concepts, I was testing pretty much everything that he taught on his channel, from like order blocks to fair value gaps, you know. But what I have come to learn is that the things that really affect price the most is the new week opening gap, right? The new day opening gap, right? Which is the orange boxes you will see on my chart. First presented fair value gaps, which is these sky blue boxes that you will see on my chart. And then I like to use open and range gaps, right? I normally make those boxes white. But you guys can also see I do use other things. Like right here, we have a weekly rejection box, a weekly rejection block. Sorry about that. Had a long day. Stuttering a little bit. So, and that's pretty much just this big long wick right here, right? And the reason why I was able to know that this rejection block was going to hold price is because, you know, obviously I'm looking for a weekly liquidity down here. We have some equal lows on the weekly time frame down here. And then we also have a weekly fair value gap down here as well, right? So I'm using that not in the sense of like price is going to come down here and just bounce off right off the rip, but I'm using that as a draw on liquidity. All right, so I'm looking for that as a draw on liquidity. So, you know, one thing that I always teach you guys to look out for is these long wicks, right? Long wicks. Because if we, let me see, I want to remove some of these drawings off of my chart. Do anybody know how do I remove these drawings off of my chart? All right. I was trying to remove the drawings, but apparently I cannot find it right now. If you guys know how to find it, please drop a comment down below. Because, you know, using TradingView on so many different devices, it can get pretty confusing sometimes. It should be right here. I don't know. Maybe visuals? No. Favorites. Okay, here we go. Tools, hide drawings, right? I want to make sure I don't delete my drawings, right? So let's just go to hide all. Okay, so when you're looking for these wicks, right, and when you're looking for liquidity, one thing you have to know is how the market likes to build liquidity, right? So you guys see right here, when the market came down here and swiped this liquidity on a weekly time frame, this candle closed above this low, right? Above this low, and then the price kept going up, right? We made a new swing low right here. And then what did price do? Build out more liquidity, right? More swing lows. One swing low right here, one swing low here, another swing low right here, right? Just to eventually swipe this liquidity going up first, right? We swiped this liquidity going up, and then what? We had a sharp rejection that told us now that we're going to swipe, go back to the downside, right? And just the same as I use the wick down here, I use this wick up here the same way, right? And if you measure this wick out right here, you will see it went up to like the midpoint of this wick, came down. So, I have received a lot of criticism about wicks on my channel. People say that, oh, it don't work, it's a scam, or whatever, right? I'm not here to like convince people about what works and what don't work, right? There's a million different ways you can look at the market. It's all about being able to create a narrative, understand liquidity, because in my opinion, liquidity is what you really need to master, more than just a fair value gap, more than just an order block. All of those things that ICT teaches, mitigation blocks, all of that stuff, most of the time I don't even use any of that stuff, right? I'll just be honest with you guys. But that came from, a lot of practice, a lot of back testing, and figuring out what works the best, right? It's not that it don't work, but I wanted to know what works the best, right? And that is why my chart looks like this, all right? It's very messy, and I know what you're thinking, like, it's a lot on this chart, right? But this is how I like my chart to be. ICT, he talks about keeping his chart as clean as possible. But you got to remember, ICT, he been trading for what, 30 years or something like that? So for me, I pretty much need stuff on my chart so that, in real time, I can know what's going on, because a lot of the time as well, I'm on the road, right? I'm trading, I'm doing so many things at one time. I need to be able to see things, right? If I was at home trading full time, I would be a much better trader. I'm just going to be honest. Not even making any excuses. It's just the truth. When you're at home and you're less distracted, you can trade a lot better. But this is something that, I'm pretty sure a lot of you can relate to. And I try to tell people this all the time. Like, if you're working, if you have kids, if you have all of these distractions, like, don't beat yourself up about not being the best trader, because those things will affect your trading. So anyways, you guys, I just wanted to do a quick outlook on what could possibly happen this week. Not really giving you guys a prediction, but trying to give you guys, just an idea of what we're going to be looking for, right? So first thing I want to do is up here, it's getting a little bit too crowded. So I want to delete some of this stuff. All right, it's getting a little bit too crowded. I'm going to drop down into the 4-hour time frame. So what I'm going to be looking for right here, going into this week, this gap right here in the 4-hour time frame, I want to see this gap stay open. And if this gap do stay open, right, I honestly don't even need this first presented fair value gap on here either. Right, I really don't need that. I'm going to delete this as well. Sometimes I do delete stuff when it starts to get a little bit too crowded. But when it comes to new week opening gaps and new day opening gaps, I'm more than likely going to leave those on my chart, because those are very significant, right? Very significant. So I leave those on my chart. But like a first presented fair value gap, like these light blue boxes, I can remove those after a while, right? I can remove those after a while. Even this big white gap right here, this is the open range gap. I'm just going to remove that. All of these yellow lines are just liquidity. I'm going to remove these right here. All right, because price is moving away from this area. I really don't need to have too much of this on there. Right. Same thing up here. I can start to clean it up a little bit. All right. I know what I'm looking for. So I'm going to be removing some of this off of the chart. Just bear with me for 2 seconds, you guys. Sometimes you have to get in there and clean this chart up. All We can remove this first presented fair value gap. Bam. So now the chart should look a little bit better. Right? So essentially, we had a market structure shift, right? We had a market structure shift on a daily time frame right after we swept liquidity. Right? So right up here on a daily time, we are on a daily time frame. When we came up here, we swept some liquidity. We went into this fair value gap right here. Right? The market held that, and then we sold off. Now, we did swipe some liquidity, but we didn't swipe everything, right? So I'm definitely going to be looking for at least on a monthly time frame, right? You see I have it labeled right here already. We're going to be looking for this monthly low, and I can take you guys to the monthly chart so you guys can see what I'm talking about. This wick right here. Eventually, we want to see the price run through this wick. Right? We want to see the price run through this wick. Right? As you guys can see, this monthly candle is a bit undecided on what it want to do. It's pretty much respecting this wick right here, but I wouldn't be surprised if it wanted to start to close below, right? But we have to see what's going to happen on the weekly time frames, because on a daily we had a market structure shift, but on the weekly time frame, notice how this weekly candle right here, let me zoom in for you guys. Like, pay attention to these swing lows. Notice how the body of this candle closed above right here, but eventually this week we got to close below this swing low, and we got to close below this swing low, which is giving us a sign that we want to continue to go lower. But we have not got to close below this swing low yet, right? And this is the swing low that we're really looking to get a close below to make sure that we're really going down. Otherwise, price could just bounce around in this area like this, right? Price could just bounce around for the next week or however long. It can just keep going back and forth like this, right? And then who knows what it's going to want to do, right? Okay, all right. I'm trying to get this off of my chart now. All right, come on. See, I don't even know how to right click on. Okay, there we go. We can remove this off of the chart. So just pay attention to the wicks is what I'm essentially trying to tell you guys, right? Even though we did hit the midpoint of this wick right here, we know that we still have liquidity up top. And one thing that I know about NASDAQ is that it don't like to sweep these key levels, right? It don't like to sweep these key levels down here for liquidity. Or I'm sorry, actually it can sweep it, but it's definitely probably not going to sweep these two over here. Right, these equal lows over here probably won't be swept. At least not until we get, I think we at least may need to run all the way back up here and sweep this liquidity out first. Right, so we don't know how long that is going to take. So let's drop down into the daily, right? So we can kind of see what range are we going to be working in. So the range that I will be looking at on a daily time frame, starting from this swing high right here. And then we're going to drop our Fibonacci down to this swing low right here. So this is the range I will be working in until we get a breakout above one of these ranges. This is the only range that I'm concerned about for this week to come. So when I find my range, the next thing I'm worried about is liquidity, right? Where's liquidity? Obviously, we can clearly see we have a bunch of liquidity resting right there. All right, and then we have some liquidity resting right here as well. And then as the market, continues to do its thing, it's going to build out more liquidity, right? It's going to build out some more liquidity. So Now we can drop down into the 4-hour time frame, right? And then we can see what we have going on here, right? Back to what I was telling you guys about. This right here on a 4-hour time frame should act as a breakaway gap. Based on how ICT taught it to us, how do you know if it's going to be a potential breakaway gap? You use the Fibonacci tool. You take it from swing high up here on a 4-hour chart, and then you can try to find a projected target, right? My target would have been this monthly low down here. So let's say, hypothetically, if the market got to this monthly low, you will put your Fibonacci tool on this monthly low, right? And then the 75% or 25% level, depending on how you place your Fibonacci tool, is going to be where you should get a breakaway gap, right? So theoretically, this gap right here should probably be a breakaway gap as well. And you guys can already see it's kind of already acting as a breakaway gap right now because price went into it just a little bit and then it sold off, right? So how am I going to use this information? Well, if price goes all the way back up into this gap right here, that is going to tell me that we're likely going to go back up, right? We're likely going to, because overall we're still uptrending. All right, let me take you guys back to the daily time frame. Even though we had a market structure shift up here, overall, right, the overall picture is still going up. So it's like, yeah, we came down here to sweep some liquidity, but after we swept that liquidity, we're probably going to go right back up and then come back up here and target some more liquidity, right? So this is why, me personally, I really don't get into the whole predicting the market stuff. Honestly, I don't even do this much of a analysis on Sundays, right? I'm going to be honest with you guys. On Sundays, all I do is when the market open, I put that new week opening gap on my chart, and then I go back to sleep or do whatever it was that I was already doing, right? Because you guys can see the market isn't really doing anything right now, right? The market isn't really doing anything. There's nothing for me to do here. So because trading is already so exhausting, I like to give myself a break. When the market is not open, I like to give myself a break and just relax, right? So we have already bounced into this weekly rejection block. So I'm definitely going to be looking for price to eventually come back down here and sweep this liquidity, right? Then you guys can see that we also have, right, order block right here, a bunch of different things that can hold price up. So I'm going to at least be looking for a price to come down here and sweep this liquidity before we make our way back to the upside. I don't know when it's going to happen, but that's what I'm going to be looking for, right? And then you obviously have to be aware of the economic calendar, right? Because the economic calendar is going to tell you a lot about, when it could happen, right? What day it can happen. So I'm going to check out the economic calendar right now. Let me see. Monday is a bank holiday, so probably won't get that much action Monday. And then Tuesday, coming out of a bank holiday, I really don't like to trade after a bank holiday. Sometimes there's like an opportunity for a scalp, but there's really not going to be that much opportunity, right? And then Wednesday, we have orange folder news at 8:30, and then we have a red folder news at 2 p.m., FOMC news, right? And then Thursday, we have a red folder news at 8:30, unemployment claim, so that shouldn't really do too much to the market. And then Friday, we have red folder news at 8:30. Then we also have red folder news at 9:45, right? So this up and coming week it's really a weird week to trade. It's a weird week to trade, but there's going to be opportunity to make money, just like it always is. But you want to be aware of the economic calendar, right? So Monday, bank holiday, we're probably not going to be doing anything Monday. Tuesday, the day after the bank holiday, we're just going to be getting a feel for the market, right? So the Tuesday is going to be like the Monday now. So we just get a feel for the market. If we do find a trade, we have to just scalp that trade. We're not going to try to get too fancy. Wednesday, we got FOMC news at 2 p.m., right? That should be a pretty good day to trade. Should be a good scalping opportunity for the morning and evening session. Normally, FOMC, it's a pretty good day to trade. You just have to take profits quick because the market does a lot of back and forth, right? Thursday and then Friday, right? So we're going to see what happened. We're going to be seeing what happened. But obviously, you guys can see all of these new week opening gaps I have on my chart. This is the weekly time frame. If we go back to the daily, time frame and look at our overall range that we're in right here from swing high to swing low, you can see the midpoint is about right here, right? So maybe we go back up here and sweep these lows out up here, right, before we continue to the downside. All right, but so far, you guys can see this volume imbalance have held price down. So I really can't see them pushing it all the way up this high, at least not until FOMC on Wednesday. At FOMC on Wednesday, I think they're going to save this target down here, this monthly low for that day, right? So just be aware of that monthly low for Wednesday, all right? Now, because I'm not going to be on screen for too long, I want to look at Bitcoin and Ethereum, because the last time I was looking at Bitcoin and Ethereum, man, they was dropping, right? They was dropping. So let me see what's going on with Ethereum. Ethereum is currently at, $1,970. Some of you guys know I'm looking for Ethereum to come all the way down here, $800 and below. And that's just based off liquidity, you guys. I say it, I'm going to keep saying it in every video. The market runs off liquidity. And so many people have been getting liquidated because they think that, they can just hold forever and ever. Some of you guys y'all be up 10X's and still trying to hold for 100X. You can't do that. You can't get too greedy, right? So we have all of this liquidity on Ethereum. Y'all know for crypto, all of my markups come from the higher time frames. Typically, it's going to be coming from the 6-month or the 1 month or the 1 week chart. So looking at Ethereum, same thing, you guys. We have a big long wick right here. So understand, if we're looking at this from the 6-month time frame, right, it's going to take a while for this to play out. Am I saying that we're going to get an $800 Ethereum tomorrow? No. Right? So what I'm saying is that you have to learn how to trade. I'm not day trading any of this stuff, but it's the same concepts that apply, right? Look at this. Measure out this wick. Right? We're currently already at the midpoint of the wick. We're getting a little bit of a rejection, but not much. Right? I wouldn't be surprised if we came all the way down here and worked down here to the lower part of this, the 25% level of this wick, which is around $1,640 for Ethereum. Right? So understand that price is going to bounce around a little bit, right? It's not just going to go straight to 800. It's going to bounce around, go here maybe first, come here, build out some more liquidity, get everybody scared one more time, go all the way back up, make everybody think it's ready to run, come all the way down again, that's what the market does. So that's why I was telling people, a lot of people who don't really trade, while the market is doing all of this stuff, what you can do is start saving money, putting some money to the side, so that when Ethereum come down to 800, 600, or 500, right, save your tax money, right? Obviously, this is not financial advice. This is just what I'm doing, what I'm going to be doing. Save your tax money, right? Save however much you can, so when the price come down here and sweep this liquidity, because I think that when price sweep this liquidity on Ethereum, it's going to be just like this wick right here, right? So price is going to come down here, and it's going to be down here for like 2 seconds, and then it's going to come all the way back up here. So you have to have a limit order in, because this is going to be like a breakaway gap, right? This is going to be like a breakaway gap right here. Breakaway gaps it doesn't mean that price can't ever hit into that breakaway gap. It just means that sometimes price can hit in that breakaway gap and then reject very fast, and you have to anticipate that. But if you don't learn anything else from my channel, always learn that liquidity rules everything, right? So these swing lows that we have down here are likely to get taken out. I know everybody love Ethereum. We don't want to see it go back down to 800. We don't want to see it go back down to 500 or whatever. But that's just what it is, right? That's why. And how did I know Ethereum was going down? I had this wick measured out on a 6-month time frame. And I told everybody, I said, if we don't get a body, right, if we don't have a body close above the midpoint of this wick, then price is going to go back down. So you guys can see liquidity rules once again, because we had a swing high up here. The market came right here, took out that swing high, and now it's going back down. Right, so that's how the market works. The market works off liquidity, you guys. That's why, I have so many videos on liquidity. I pretty much talk about it in every video, because if you just learn how to understand that alone, you're going to save yourself from so many losses. All right. So how do I know that the market is going to, dance around here like this? Right, dance around, go back up, do another dance move, right, and then come up here, make everybody think, oh, this is it, and then they're going to drop it again. How do I know? Well, obviously I don't know. I'm not from the future. All right, what's going on? But this wick right here, it's the same thing. We're going to measure out this wick with our Fibonacci tool, or we can put a box on it, whatever you want to do. And we're going to be looking at the midpoint of this wick. So if a wick, if a candle on a 1 month, or actually we're on a 6-month time frame. So we would need a 6-month candle to close at or above not only this wick, but this wick as well. If we can get that, then we can start to go up. All right, we can start to go up. It's very simple, you guys. Very simple stuff right here. So, but until then, I think the best thing to do is stay liquid. Meaning, buy USDC, or, save your dollars, right? Save your money, and be ready for the dip. Because I do believe that when this next dip happen, it's going to freak everybody out. It's going to be so crazy that everybody is going to be freaked out. But if you're smart, this is going to be the dip that can change a lot of people's lives right here. I truly believe that. This is going to be the dip that's going to change a lot of people's lives. This could be your last opportunity to get a $700 or a $600 Ethereum. This could be your last opportunity. So, you know, you want to take that tax money if you're getting 2,000, 3,000, whatever you get back. If you can get 5 Ethereums for you know, $600 a piece, and you get that for 300, you get that for you spend 3,000 total, and then if Ethereum goes up here to 6,000, that's a 10x. So now you turn that 3,000 to 30,000. But you have to understand that we're looking at the 6-month time frame. So these candles are going to take a long time to play out. Right? Everything that I'm talking about, it may take an entire year to play out. It may take 2 years to play out. That's why I'm talking about this every day, because there's no excuses. Like, I don't want none of my friends or my cousins or anybody to call me and be like, oh man, why didn't you tell me, bro? Why didn't you tell me about Ethereum? Bro, I made 1 million videos. I've made 1 million videos, bro. I can't do it all for you. You know, I can only do so much. Eventually, you know, you gotta put some work in for yourself too. Like, I'm truly trying my best to help as many people as I can. All right, but when it comes to, you know, our people, sometimes they just don't listen, and they miss out on golden opportunities, right? And it is what it is. I can't save everybody, but the people who's coming to my channel and actually want to learn something, instead of dropping a comment on my videos talking about scam or whatever else, bro, everything that I'm doing is for free. I don't have no reason to scam anybody. You know, like, I don't have the energy to be doing scams. You know, but if you're going to come on here and be willing to learn and put some work in, then you're going to better yourself. But you have to get out of that mindset of thinking everything is going to happen overnight, because it's not. It's not going to happen overnight. All right? But I've been calling some of these prices out for a long time. Right? Same thing right here. Bitcoin. Look at this weekly. Look at this 6-month wick right here. We can measure this out. This yellow line right here on the 6-month time frame. We can expect price maybe to get back to this midpoint of this wick, which is also where the weekly inversion fair value gap at. And the reason why we can potentially expect price to go back up there is because of what I just told you guys. Liquidity rules everything. So even as the market is going down, what are they doing? They're building liquidity. Right here, liquidity. Right. I can move this one. Right here is also some liquidity right there. So this is what the market does. Even when it's going down, it's going to build out some liquidity. Now, some people have probably already got freaked out and they sold for a loss. But it's going to probably give some of you guys another chance to get out if it do come all the way back up here. Bitcoin starts to move really fast, especially when they flip that switch, right? It's like sometimes I feel like they flip a switch and these NASDAQ, Bitcoin, all of these things start moving really fast. All right, so you want to be aware of that, but ultimately, I'm looking for this thing to come down low. I'm not going to get fooled, and I'm not going to, you know, be locked into the hype. All right, I want to also look at Solana, right? Let's look at Solana real fast, because a lot of you probably remember Solana. I remember when Solana was up here almost, you know, at $300. I was telling everybody, do not be buying Solana up here at 300. Whatever you do, don't do it. But essentially, right, Solana got all the way down here at $10. Solana came all the way down here at $20, right? And then it went up to almost $300, giving everybody a 10x. People didn't even want to take profits because they wanted Solana to go to $1,000 or something, right? You have to always understand what liquidity. Look at these lows right here. Did y'all think that the market was not going to come back down here and take these lows? Right? It recently hit into a zone that I'm looking for potential buys. But have I started? Well, okay, I have been putting like a very small amount of money into Solana every week, like literally $7 a week. But, you know, because I'm doing everything off the higher time frames, I don't have to rush into any of these positions, right? I know that on a 6-month time frame, right, it's a gap right here that we're looking at on the 6-month time frame. Make sure I label this. All right, then we can lock that on there. Right, so we're going to at least bare minimum be looking for the midpoint of this gap. So I want Solana at $53 or below. All right, then when we drop it to the 1-month time frame, right, we can see all of these other gaps down here as well. This gap down here, this very last one, this should be a breakaway gap. So if Solana decides that it wants to wick, right, like let's say it creates some liquidity like this, right? It comes here, go back up, right? Do something like this, make everybody think the trend is starting to move up, going back up. We sweep that liquidity, and then we come here, hit the midpoint, have a little bit of a bounce. Everybody start to think it's going up again, and then boom, right here, it hits this breakaway gap, right? But when it hits it, it's probably going to hit it for a split second, and then bam, it's going to take off. And at that point, if you're not in the trade, you're just too late. And that's why I've been telling y'all, think about it. COINBASE, Crypto.com, KRACKEN, at one point they didn't have limit orders. Now they have limit orders, so y'all can use those limit orders, right, and be prepared for these trades. But if you're not using the limit orders, if you're not paying attention to everything that's going on, you're just going to get left behind. All right, because think about this. If you can get Solana for $53 or below, look at the upside potential. Right? Let's look at the upside potential. We don't know where Solana. What if Solana becomes the next Bitcoin or something? What if it goes to 10,000? We don't know. But at the bare minimum, we can at least target these most recent highs. So even if you get it at $40 and you sell it at $400, that's a 10x. So this is why I've been talking about investing so much, because I'm becoming an older guy myself. You know, I can't just day trade forever. I need to have some investments for myself and for my kids, you know. I love day trading, but, you know, we have to have something for the long haul as well. All right, and I think that's pretty much it for today, you guys. I did a couple streams yesterday. Yeah, I did a couple streams yesterday. Go check those out. We went over some defense plays. We went over a lot of energy companies that I'm going to be looking at. And make sure y'all go watch those videos. if you're interested in those investments as well. If you guys want me to do more videos about, my strategy that I use using ICT concepts, drop a comment down below. I know I need to give you guys some updated videos on that. But if you just come and join these live streams every time that I go live, I guarantee you're going to learn how to trade a little bit better every day. But you really have to put the work in. You have to study. Nobody else is going to do it for you. If you think you can just watch CNN and listen to Fox News, you're never going to learn how to trade. You're never going to be a profitable trader. That's just the facts. So appreciate you guys for watching. Make sure y'all drop a like, subscribe to the channel if you haven't already. A lot of you guys be watching. I don't know if y'all don't want to see me be great or what, but y'all do not be dropping a like. And it's okay, man. I'm going to keep posting, doing my thing regardless. But it would be nice if some of y'all could start dropping those likes using code KRACKEN, right, at checkout. Shout out to the people who've been using my code with Apex, who've been using my code with ETH markets. I do got an update video coming out that I'm going to be working on soon. As far as like the prop firms that I'm using, I got to give you guys an update on everything that's been going on, because it's been a lot going on with the whole prop firm stuff, man. I'm not going to lie. It's been a lot going on. I can't wait to give y'all the updates, but as of now, I have to pretty much be headed to bed because I have to wake up at 1 a.m. in the morning to deliver this load. I'm currently in Florida right now, so I will see y'all in the next video, man. Peace out.